Hello friends, welcome to our digital blogger. Today we'll talk about how to find value stocks. Now what exactly are value stocks? We need to know that first. Value stocks are one of the best ways to earn very good returns on your hard-earned money from medium to long-term perspective. Let's start with the basics. Value stocks are those stocks which have the intrinsic value that is higher than the stock price in the current market. So, value investors are continuously searching for such stocks in their portfolio. The question that how to find value stock and what are the things that you keep in mind is the one that we're answering here. There are many signs, there are many hints that you should be looking at. The stock price of companies of the same sector may seem to be much higher than the value stocks, and the reason could be some temporary thing like not able to achieve investors' over expectations in terms of earnings, etc. The company has been stable for some time now and a good track record of giving dividends every year. Also, the company might have been paying its debts and the market has not factored that thing yet. Third, another obvious sign of value stock, it is relatively new. Its IPO has recently been launched because of much people have not recognized it and they're going to realize that the true potential of the stock is much higher in the future. Now, Benjamin Graham is known as the father of value investing and is the author of two of the best books that have been ever written. The name of the first book is Security Analysis, the other book is The Intelligent Investor. It is considered that if you read these books and imbibe the knowledge imparted in them, and then you can turn around your life in terms of finance in a very short period of time. The first criteria in order to understand how to find value stocks is the rating of the company. It should be at least average. A company with a higher rating could be already accurately valued or even overvalued, but a company with an average rating has a better chance to be a value stock. After this, you need to check some of the very basic things like healthy debt to equity ratio, current ratio, price to earning ratio, earning deficit, etc. A good and healthy debt to equity ratio means that the debt should not be too high as it would eat away into the profits, and it should not be too low as that would show lack of expansion and growth plans in the company. A good current ratio would mean that the company has sufficient cash to meet its needs of expansion, repaying its debts, giving dividend, etc. Also, another important thing is the kind of dividend it pays to its investor and the quality of management it has. It's very subjective, but it is important. Above all, in order to know how to find value stocks, you should have the confidence to believe in the research that you're doing and stick to your decisions, even when the market is not paying any attention to your stock. A lot of information required for the selection of value stocks can be easily accessed through annual reports of the company, and there are other areas too. If you are a stock market enthusiast and want to learn the fundamental analysis of a company and more stocks, you should be looking at our app Stock Pathshala, which keeps away multiple stock market education courses in free version, as well as there is a pro version for advanced level learning too. So friends, in order to find value stocks, this is exactly what you need to do, and consistently you need to keep an eye on the kind of stocks that you might be investing in. Thank you so much for listening to this one. We'll see you in the next one soon. Bye bye.